Good morning, everyone. Welcome to the Hong Kong Fintech Week. I've always wanted to speak to you from a virtual stage, especially given the nature of this event. And this year, thousands of you are joining virtually from around the world. And that surely reflects the extraordinary energy in Hong Kong's fintech sector. The rise of fintech has led some people to ask whether it will replace banks one day. I tend to think about it a bit differently. I would like to know how technology can actually make banking better. There are three core principles that will always be the bedrock of good banking. And they hold true for tech companies coming into finance or for traditional banks embracing technology. And I'm talking about good service, customer trust, and efficient capital management. These principles have endured through the eras of the abacus, the ledger, and also the first computers. They are timeless. We can compare this with food, one of our favorite subjects in Hong Kong. You can eat in a Michelin-star restaurant or Dai Pai Dong, or you can buy food in the market and cook it yourself. You can even order a takeout and have it delivered to your home. You can eat 1,000 different ways, but you can't have a meal without food. In the same way, you can't have banking without service, trust, and capital. And yes, technology is replacing some traditional banking channels and processes, but that actually enhances these core principles. So I don't think technology will replace banks, but rather, I'll be making the case today that technology will make banks better, whether it is delivered by an established bank or a new market entrant. In 2017, just 3 years ago, the HKMA launched 7 initiatives to begin a new era of smart banking. Since then, the competitive landscape for banking in Hong Kong has changed quite a lot. We are proud to be one of the first markets in the region to have fully digital banks or virtual banks. As we speak, our city has one of the highest number of virtual banks in Asia. And today, customers can choose from a wider range of banking providers and platforms. They can choose digital or physical, niche or universal. And not surprisingly, competition is bringing down costs and improving customer experience. For example, traditional banks have been phasing out fees for maintaining low account balances, and many are proactively improving their digital platforms to improve the user experience. And we owe this progress to the innovators, entrepreneurs, and bankers in today's audience. It's been driven by your hard work and your determination. As a regulator, we help to facilitate this progress. We ensure a level playing field for all types of financial institutions, and we uphold the integrity of the banking system. 160 plus incumbent banks and new virtual banks, including the banks built by the tech giants, they all operate in our ecosystem. They may have different fintech strategies. They may try and grow their digital banking businesses in different ways. But it's precisely this diversity that makes the Hong Kong banking market so dynamic and well-positioned to drive innovation. This diversity is crucial to our vision of shaping Hong Kong into a global fintech hub. So Hong Kong has embraced a new era for smart banking. But what will the next era look like? How will we bring our vision to life? I think we're all here with those questions in mind. At the HKMA, we know that data will be vital to the future of banking. Data analytics is pivotal in customer authentication, credit assessment, and also compliance monitoring. In fact, data is key to almost every banking function. It is perhaps the most powerful tool for delivering the timeless principles that I just mentioned. As we head into the next era, data will enable better service, greater trust, and more efficient capital management. And going back to my dining analogy, you can say that data is banking's secret sauce. It makes every meal better, no matter how you serve it. And that is why the HKMA is adopting a data-centric strategy to support the future of banking in Hong Kong. I've been talking a lot about our efforts to promote diversity and innovation through a level playing field. That reflects our supervisory role. But equally important is our role in fintech market development. This market development mandate is the context for our new data strategy. And let me give you some background. Hong Kong businesses and people are embracing technology. They are ready for the future. With more data and more analytical tools at our disposal, we should ensure that our data infrastructure continues to improve. Let's consider where we are today. To begin with, valuable and rich data are scattered across different sectors and entities. It's often very hard to access these data, and it's even harder to verify their validity. And what's more, information moves between data providers and banks via a whole host of bilateral one-to-one connections. And these connections do not have compatible protocols and standards. And that makes data sharing a lot more inefficient and difficult to scale. All of this makes it very hard for bankers to collect holistic information from their customers about their business or financial activities when they want to provide credit or related services. And that creates real impediments to banks' ability to better serve their customers. And impediments for banks often mean painful consequences for the customers, especially the SMEs. When banks cannot perform credit assessment based on up-to-date business data, they may instead require collateral, such as property, before making a loan. And this is a long-standing problem with SME financing. Trade finance is another area of concern. It's often very hard for banks to access the trade and customs records of the importers and exporters. And that can make it difficult for banks to conduct credit assessment, and also very difficult for companies to get the trade finance loans. Although some banks are using their big data initiatives to assess credit worthiness, a more general and long-term framework is needed to solve this problem. These examples highlight the need to improve the data landscape in Hong Kong. We want to make sure that it doesn't become a factor that limits our city's potential for better banking. So today, I would like to introduce you to a new market development initiative for the next era, the Commercial Data Interchange, or as we call it, the CDI. CDI aims to establish a consent-based common standard for the data owners to share their digital footprint with banks through their data providers. Today, we rely on multiple one-to-one connections between the banks and the data providers. But under CDI, each bank and data provider will have a single connection to this interoperable platform. And that should make data sharing much more efficient and a lot more scalable. Financial institutions and data providers will be able to easily connect their own systems to this infrastructure. And that will allow the customers to authorize their own service providers, whether it's the utilities companies or the payment gateways, to provide banks with relevant and authenticated data through this platform. And with the customer's consent, the banks can have direct and efficient access to a substantial body of data. And that will enable them to offer the most suitable services to customers, or perform more precise and objective credit assessment. And that, in turn, will help banks address the pain points that I just mentioned. Let me give you an example of what CDI could deliver. Think about a family-run noodle shop which has always got problems getting bank credit. They can now choose to allow its bank to access historical turnover data from its point-of-sale terminals. And with access to this data, and by using AI tools, the banks should be able to make an accurate forecast for the noodle shop sales. And that means the bank can make a credit decision without having to first ask the owner for loan collateral. And hopefully, the noodle shop will be successful and its sales rise above the projections in the bank's model. Then its credit limit can automatically be increased by an appropriate amount in the future. The small importers and exporters might also benefit. Through the CDI, they could authorize the trade servicing platforms to allow their banks to access reliable trading data. And that should help the banks understand these customers' trade counterparties, and in turn, that can reduce money laundering risk. And because of that, those trading companies' access to financing should improve, and their cost of borrowing should fall. With CDI, our aim is to enable bank customers, especially the SMEs, to take more control of their own digital footprint so that they can use their own data to enhance their access to financial services. And of course, we will ensure that the principles of customer consent and data security are upheld at all times. The platform will also be subject to rigorous governance that will include consumer protection measures. This new data strategy is a paradigm shift in the development of Hong Kong's financial infrastructure. We have always facilitated the secure movement of funds through our robust clearing and settlement systems. Now, we will also be facilitating the secure movement of data at the initiation of the data owner to enable more efficient financial intermediation in the banking system. This will be an important catalyst for applying technology to enhancing those timeless principles of banking. Just think for a moment about what CDI can make possible. There could be an array of new financial products which enhances service. There will be reduced fraud and lower compliance costs, which strengthen trust. And there could be bespoke lending with finely tuned pricing, which allows capital to be deployed more efficiently. As a leading international financial center, Hong Kong should always be looking to enhance cross-border banking too. As any of you who have ever made an international remittance will know, the correspondent banking system we have today is far from perfect. In fact, it is inefficient, costly, and opaque. The central banking community understands these issues, so the Bank for International Settlements has set up a specific task force to study how we can apply technology to improve cross-border banking. And the HKMA is one of the leading central banks in this initiative. We are collaborating with the Bank of Thailand to explore the potential of a blockchain-based central bank digital currency network with a view towards more efficient cross-border payments. We have already developed a proof-of-concept prototype that will enable real-time cross-border fund transfers on a peer-to-peer basis. In the next phase, we are exploring business use cases such as cross-border trade settlement and capital market transactions. We will soon bring banks and large corporations into trials to test the network using actual trade transactions. Looking into the future, further studies will be undertaken to extend the architecture to a multi-CBDC platform. Leveraging the wholesale CBDCs on this platform, e-wallet service providers may be able to offer retail use cases such as remittances and cross-border payments for travelers within the region. We hope this initiative can provide the market with efficient, cost-effective, and transparent cross-border payment services. Together, the CDI and CBDC initiative show the HKMA's commitment to delivering on our market development mandate. They are both live examples of our focus on applying technology to achieve better banking. We believe they hold great potential for bank customers in Hong Kong and for innovators like you. I said earlier that the principles of service, trust, and capital management are timeless and core to good banking. I hope that what you will take away from my remarks today is that the HKMA is committed to creating a healthy fintech ecosystem to enhance those principles. To do that, we will continue to take a technology-neutral and risk-based regulatory approach, offering a level playing field for incumbent banks and new market entrants alike. So I call on all of you to put your most innovative ideas, your best technology, and your brightest people to work on the fintech solutions for our city. I think you will find plenty of opportunities here. And I believe that together, we will take banking in Hong Kong to new heights. So join us and be part of this exciting fintech journey. Thank you very much.